Hello guys, this is Teacher Sherilyn. Welcome to my channel. For today's video, we're going to talk about insurance. I interviewed a financial advisor about insurance and I asked him 3 questions regarding insurance. The 3 questions that I asked were: what are the different kinds of insurance? What kind of insurance should one have? And at what age should one get an insurance? Let's go to the first question. What are the different kinds of insurance?
So the first question will be, what are different kinds of insurance? Okay, a lot of people, they have some misconceptions about insurance, or they also have no idea of what insurance is all about. So I'm just going to break it down into a very simple format to show you what are the different kinds of insurance, alright? So we all do understand that there's actually a food pyramid as well. So in life, we also have this called a life of pyramid. Okay, this is actually for simple understanding. So this is the life of pyramid I'm talking about. As we all know, the base is actually the most important. This is the fundamental, okay? So for us in life, what is actually the most basic fundamental things and yet the most important, which is health, alright? Because a lot of times people will say that if I have no health, there's no way I can spend my wealth, alright? So in terms of health, what are we looking for? Insurance, okay? In layman term, we will always call it as protection. Protection against what? This is protection against any health problems that you may face in the years to come. Okay, so a lot of times I will just let my clients know that in terms of protection, we need to protect ourselves from the hospitalization cost as well, because this is actually the #1 killer. Alright, and then of course we do have some things like called the personal accident. So this plan itself is very simple. It's talking about if you have not been hospitalized but you have to visit a GP or any clinic for some small issues. This is something also links to your health. And of course, we do have other things like critical illnesses. And this is something that a lot of people, they don't understand. They thought that everything would be covered by hospital. Okay, there are a lot more which you want to find out more. Maybe I can share with you during the next episode or whatsoever. But these are actually the basic health elements that you look at when it comes to insurance. Okay, when you have the you have the good health, what we need is of course wealth. And that is the reason why you're always going to work every single day, because you want to have a better life. You want to build a better wealth. So what kind of insurance can really help you in terms of building your wealth? Alright, depending on your risk appetite as well, we do have some savings plan. Savings plan is very simple. It's just every single month you will have a certain amount that you would like to save and would like to grow more interest with the insurance company. And how is it payable is based on the performance of the company itself. Okay, for people that has a higher risk appetite, they can also look at some investment funds that the insurance company has to provide as well. Okay, so this is actually the 2 fundamentals of the life of pyramid. And of course the last one, it's a legacy. Okay, because by building so much wealth, okay, your health will deteriorate one day and you will have to leave the world. So a lot of clients will always use their wealth to build a legacy so that the next generation can always remember them. So in terms of legacy, this is all talking about building multiple generations. So instead of actually passing down whatever inheritance you have for the kids, why don't you actually leave a legacy behind by passing down the same amount of wealth you have by not affecting your own spending as well. Because conventionally, how people actually pass out their inheritance is they will spend whatever they have and leave behind whatever that's been unspent. But if you have done an insurance policy, a legacy planning is whereby you just need to use a little bit of amount of whatever wealth you have, you can actually leave down your legacy for multiple generations to come. So this is actually the basis of what the different types of insurance has to provide for you.
The second question is, what kind of insurance should one have?
What kind of insurance should you get, right? You always hear from your friends, oh, you should get this. You hear from your colleagues, oh, you should get that. And you hear from your family members, oh, you should not get anything I already bought for you, correct? Things like that. A lot of times, you will never ever know. That's the best time you actually need to find a financial advisor or insurance agent that can actually give you the best advice. So for myself, how I actually help my clients to plan is very simple. I will never know what kind of situation you are under. And you and I, let's say for example, we are of the same age, we may have different liabilities and commitments as well. So the insurance that I need to get might differ from you. So a lot of times if you are actually hearing from your colleagues who is the same age as you, buying this sort of insurance may not be suitable for you. But don't worry about that. I'm going to draw a timeline of event to show you in general what kind of insurance you should get. And in case you are of this stage, you can just look at my instructions on advice on what you should get, okay? So this is actually the timeline of event that you will all go through, okay? Eventually, we will all come here one day, and this is death. We will kick the bucket, okay? In life, we always have 4 stages, okay? I always call this stage 1, which is whereby we just started off at work. So what it does is that most of the time, we are single. And everything we do is for ourselves. So what it does is that over here, there is not much commitments. So what kind of insurance should you get over here if you just started? It's very simple. Anything that can protect yourself. In stage 2, is whereby some of you may find your another half and you need to do some planning for your future half. So what it does is here, you need to consider your future, which is probably your house, your wedding, and your future short to mid-term planning. Why is that so? Because for your own planning, when you do, it will affect your other half. So my best advice is that if you have your other half, it's always good to come down together, to sit down and to discuss your future planning both at the same time, alright? So in stage 3, some of you might like a child, okay? So at this point of time, most of you, very common, will be planning for the education and of course the health of your child. And most often than that, people always neglect about your own self. If you were to ask me, if that's the case, how do I do a planning? The best of both worlds would be to plan for both. But if you really have to scale down to one, I would suggest to plan for yourself. Why is that so? Because you are the one bringing home the bacon. If anything happens to you, then the income stops, life will change, but your kids will still have to go on with their education and their health as well. So whoever is actually earning more should be covered more in terms of the coverage, if that's the most basic recommendation you would want to find out from me. But of course, there's actually stats for me to calculate of how much you really need to be covered based on your earning income power as well, which we will share more during the next episode if you're keen to find out more. Okay, and of course the last stages is of course over here. It's to talk about your own retirement. And as I mentioned in your first question, it's about also starting to prepare to leave a legacy behind for your next of kin. Because by then, your kids most probably would have be at this stage of financially independent whereby they have already started to work, step into the workforce. So this is whereby there will be less commitments for you. You might want to relook into your policies, things like that, or whatever there is of a life plan or whatever, you can start to encash it to enjoy for retirement, unless there are still people depending on you. So let us just recap over here. In stage 1, you should just plan for yourself. Okay, if there's someone depending on you, yes, then you have to put that into consideration as well. So let's move on to stage 2, whereby you have your other half. So the most basic planning you have to always engage your other half and sit down together and discuss with a financial advisor that you trust. In stage 3, if you have a kid, very simple, you will have to plan for the best of both worlds, which is yourself, your spouse, and of course, a kid. But if budget is an issue, I should always suggest you to plan for someone who is always earning the higher income power. So in that case, if you are the higher income power earning in your own family, then you should plan more for yourself, and vice versa if your spouse is. Okay? So for stage 4, just have to plan for your retirement if there's no one depending on you, because by then your kids will be financially independent already. So I hope that this will actually just clear the doubts of what kind of insurance should you get based on this. Alright?
The third question is, at what age should one get an insurance?
So at what age is actually recommended for someone to get insurance? So in my point of view, working 7 years in this industry, there's actually no suitable age. In fact, everyone should get an insurance right when they are get born in this world. Because why is that so? Because every single time at different life stages of your life, you will encounter different problems. Okay, when you were born, your parents will probably have to worry about you being hospitalized because your immune system is at the weakest point of time. And the number of times that you will be hospitalized will be much higher when you become an adult. So hospitalization costs would be an issue as well. So as a parent, they can always get a hospitalization insurance for their family. Okay, as you actually grow on further, then your parents will start to worry about your education funds in the university. So conventionally, people would like to just save their money in the bank that just grows a miserable interest. So people are start looking elsewhere. But in fact, if you were to ask me how to actually save about for education funds, it's very simple. Education funds is something that you cannot miss because there is a limited number of years that your kid will grow up one day, and this is the amount of time that you need to work at. So the principle will always need to be there, because if you're going to do investments, let's say for example, you are running into risk of not getting the capital back at the end of the day, but by then your kids will have to go to university. So what will happen? Eventually you have to take a loan. So my point of view is very simple. If you were to do education funds for your kids, just go for saving plans with a capital guaranteed returns. That would be the most ideal. And as we move on to the next stage, is whereby your kid starts to go into the workforce and you are probably going into a semi-retirement. What kind of plans? Your kids can be financially independent. He can look for himself a life plan, a hospital plan, or critical illness plan for himself. And probably for you, you just have to take care of your own health and of course, maybe look into a retirement plan. So in conclusion, if you were to ask me at what age is recommended, in fact, right from the start, when you were coming to this world, you should get insurance for yourself already.
I hope you learned a lot from this video. If you find this video useful, you may share it with your family and friends. If you like this video, click like and don't forget to subscribe to my channel. Thank you guys for watching. See you again next time. Bye!